Morning, guys. Hey, everyone. Hey, Mike, Aaron. I probably set the Zoom call up wrong, so we're all on a regular Zoom call instead of a webinar, but I'll figure that one out. Hey, Mike. Leroy. Just wait another sort of 4 or 5 minutes for everyone to get in the room, and then we'll kick it off. Lots of interesting stuff to talk about. All right, we'll kick it off on time, and we'll just wait for everyone to get in. That's all right, guys. We'll start in another 3 minutes or so.
Hey everybody, good morning.
Hey, Ian, sorry, I think I messed up the settings on the Zoom. How are you, bro?
That's all right, dude.
What's going on, Ian?
Well, what an interesting market update that was that I was just looking at with that 2-in-1 candle. But like you say, we're not fully retested yet. So I'm feeling cautiously bullish today.
Yeah, I think that's the right state. I think we've got like little advance warning that it's probably going to be bullish, but we haven't seen a lot of market reaction yet. We haven't seen the money come into the open interest, but we shouldn't see that yet either.
Yeah. Oh, nice, man. Well, we're near enough on the dot at 7 o'clock.
Look at that. I have an uncomfortable amount of my net worth in cocoa right now. I am checking the chocolate price on a multiple times day basis.
All right. Okay. So it looks like you've set up the entire audience as kind of co-hosts as well. So
sorry, that's me. My bad. Oh well.
all right.
We're just going to mute everyone and kick off with it.
I'll try and figure something out in the background, right? At any moment, somebody can unmute and torpedo you.
I've allowed them to. I've killed the option that people can unmute themselves. So everyone's video is off, and everyone's muted on entry. So I think that's as good as we're going to get. We good to go?
Yeah.
All right, let's do it. Well, this market took it right in the face for the last week. And we have our first significant pullback since the 26th of December. This was our last pullback, which we picked. We've been waiting for a dip. We finally got the dip that we've been waiting for. Wasn't quite the dip we wanted, was it? It's a bit bigger than what we wanted. It's a bit further. It's a bit longer than what we wanted. And the real question is that the end? Like, proportionally, it's about the right size. It's about scary enough. We want to know what I think everyone wants to know is this the dip that we're going to buy, or is this the dip that is just going to peter out here and then end it all and bag hold us? So in other words, is alt season still on? That's what we want to know. This is excuse my crappy drawing. This is a 1 hour chart of the altcoin market cap. And you can see that we had this series of lower highs and lower lows. Now, this happens, for a very specific reason, that when we're in a bear market mode, any bounce is an excuse to get out of your position. Any bounce is an excuse to get out of your position. Any bounce is an excuse to get out of your position. And we can see that pattern has been broken here in altcoins. It's not yet broken in Bitcoin. And I think this is important. So if we look at Bitcoin, Bitcoin is still retesting this low. So what happens is either Bitcoin will break above this green line, in which case the money should start piling back in. Those Bitcoin ETF flows, which we're going to discuss in a minute, will become reflexive again. And all the people shaking out are going to have to buy back in up here, and that extends the bull market by a fair bit. The other option is that it just keeps edging down, goes past down here, and there's not enough fresh buyers to push it up. If we see that, then we become less bullish on the market and we start to flip a bit bearish below here. I don't think that's going to happen, but we have to keep an open mind. What caused this, and why was the dip a bit bigger than I expected personally? Why was it a bit more sharper and more violent? Why did it stop one leg flow lower down? These ETF flows, this is the cumulative ETF flows, which has been driving the thing, they reversed. And everyone knows to watch this now. So it's causing the market to gyrate faster in both the up direction, but also the down direction. This is the new thing for me, is the new learning is that it's behaving a little bit faster on the downside, a little bit stronger on the upside. And this kind of changes things. We really need to change the plan here. I think everyone using leverage over 2x is gonna get wiped out at some point. I don't think for the next month or so this is going to be appropriate at all. I would like to see you not using leverage here. I don't plan on using leverage for the next month or so. I think there's too big a chance of fucking it up, basically. I think that's not a good idea. I think we're going to make plenty of money without using leverage. So what's the play here? We've had big runs in coins like Sol, ETH, BNB, like the big caps, and they still have upside. Like I think Solana's a $500 coin, but we're talking 2x's and not 10x's. And the same with BNB, the same with Ethereum. The same with everything. Our upside is limited. So I think the play is that we're going to be going more into the mid caps. Instead of taking leverage bets on BNB, Sol, things like that, we're going to take unleveraged positions on the coins we think are going to be strongest in the next round. So out of the gate, this is off the bounce, right? We're seeing MKR, Doge, SUI, TIA bouncing strongly, Phil pretty strong, and that's AVAX. Now, the thing that I want to point out to you is not necessarily that MKR is the best or Doge is the best or whatever. What I want to point out to you is that we've got a broad mix of everything in here. So MKR is a dinosaur coin, Doge is a meme coin, SUI is one of the new coins, TIA is a new coin, Phil is the distributed storage thing, AVAX is a big layer one, ETH killer. from what's standing out to me out of all that is that there isn't a dominant sector. So we have Doge near the top. So for me, that tells us that the meme coin phenomenon is still like very, very much in play. And I think that retail is flocking to this meme coin idea that you can get really rich off throwing $1,000 in one of these Solana shitters if it goes off. I think that phenomenon is new, and I think it's captured the public imagination. I don't think it's going anywhere. We have MKR, which is a dinosaur coin from way back in the day. It's on a tear. We have new coins like Ondo and SEI looking really, really amazing, and previous stalwarts like Rune and Tia coming back. So viewed overall, I think this is a very, very broad rally. So everything is going up, every sector from the dog shit to the blue chip. And for me, that's the definition of alt season. So let's take a look at how FinRev has been going. After the big dip, we recovered to new highs. We're in a drawdown. This is a perfectly normal, reasonable, everyday drawdown for us. This is not one thing to get concerned of at all. It is an ideal time to allocate to FinRev anytime you get a pullback, anytime you get a pullback, anytime you get a pullback. This is absolutely the ideal time to allocate to it. And I would say it's riskier allocating when it's at new highs. It's much safer allocating here. Now, one thing you need to understand about trend following is that increased account volatility. In other words, the amount that your account wiggles up and down, more wiggling is what you want to see. You can see previously that when the thing does nothing, it tends to do nothing for a long time. When it starts doing something, generally that's what we want to see. And there's a bunch of maths backing that up, but I won't bore you guys with it. But the opposite is true as well. What you don't want to see is it just going sideways for hundreds of days at a time. That's not what you want to see. My view is that you can add to your FinRev positions with confidence. I'm adding some of my own capital in today. Yeah, I think it's a great time. Now let's take a look at some of the FinRev positioning. So this is Bitcoin to start with. We've been gradually getting out of our position banking profits. We're just on a little uptick here. A normal buy position is 10. The strongest buy is 20. We're at 7.2. So we are a very cautiously optimistic kind of thing. So when there's blood in the streets, you ought to buy. As a general rule, you want to buy the dip that feels like you don't want to buy it. Like everyone was waiting for a dip. I want to buy the dip. I want to buy the dip. The dip that you want to buy is a dip that makes you go, oh shit, not that dip. The dip that feels good to buy is the one that you probably don't want to buy. And let's look at some spaghetti charts. So this is since October. Our strong coins remain the strong coins. You know, Sol, SEI, TIA, NIA, AVAX, Render, Rune. I mean, these are standouts. But if we scroll this back to our most recent price action, we find the lows, which are around here. And see, everything's basically going up. I think Doge is a really strong play here. I think Rune is a strong play here. MKR, we haven't issued a buy alert on yet, but probably in the next day or two. Okay, so let's take some coin requests. What do you guys want me to look at? And please, nothing that is like really, really small here. This is probably not the time and the place to start looking at things. Shiba. Great looking chart. Our same buy setup that we've got here. Above here, get very bullish on it. Okay, let's go back. Theta. Same thing, right? Lowest low in 10 bars, higher close, lower close, bullish above here. Ondo. I mean, that's a beautiful, beautiful, beautiful chart. We have fresh highs, steady marching up. No reason to get out of this. This is probably the best looking chart in crypto right now, Robert. XPR, I've never heard of it. Proton, let's have a look. Looks the same as everything else, but this is a very thinly traded chart. I'd be very careful with small coins. Susan, B. So that is a unequivocally nice looking chart. Susan, super. I'm certain it's going to be the same chart. It looks exactly the same. It's an unequivocally nice looking chart. And NIA looks fabulous. A little bit of sector rotation. It's a little bit weaker than it was, but it was the strongest. So I can expect this to be just the normal swings and roundabouts. ICP, strong off the lows. Nothing wrong with this. I'd prefer to buy it when it's, when it's heading up past here, or when it looks like it's so close to here that it doesn't make any difference. I'd like to buy that there. S&T, not as strong. This is a little bit of FOMOing in here has caused a lot of bag holders. I think this one's probably going to work. I think they're all going to work right now. Myria. Same thing. It's a beautiful looking chart. Like all these charts that we're seeing now, IOS is a beautiful chart. And that's a magnificent chart. Like if you own that, you wouldn't. So I think what we're coming to is that there's nothing here that's not a beautiful, beautiful chart. The ones that I think are strongest, Sui, Ondo, and some of the smaller ones. Wilder's World. There's one I haven't heard of since I owned it way back in the day. That looks phenomenal. Like beautiful, like, year-long basing pattern. We've just broken out, shook a bunch of weak guys out, bouncing hard because they all got shaken out here. That looks phenomenal, Craig. FET looks amazing too. I mean, that's a beautiful chart. You start to get more bullish on it above here. Woo, still great. It's a little bit fallen behind some of the others, and we'll see this. Oh no, it's bouncing pretty hard. It's like right up the top of the. Yep, nothing wrong with Woo. It's behaving right. Okay, what else have we got? GRT. Phenomenal chart. And this is a dinosaur coin. This candle is a little bit FOMO-y. I would be short-term cautious until you see a break above here. But I think if the market runs, this is going to break here and we're going to see strong action off there. Vertex. I sold out of this one a little while ago. I sold out here. It bounced a little and dropped. This is weak. I think Vertex has to go. XRP, the perennial bag holder coin. It's bouncing now, but it's so far behind all the other coins. So XRP will have its day, but it's on any view, it's just like been a mediocre performer. Like XRP is the dark blue line on any time frame. It's just mediocre. So if your capital is allocated to XRP at this point, you're probably being influenced by the fact that you paid for it way back in the last bull market, and you're thinking that you can't sell it at a loss or some shit like that. Like that's all really bad thinking. Just like you shouldn't be in an XRP. ADA, same thing. bullish over here. You can see these are all the same charts. Optimism is basically an ETH beta play. As ETH goes up, it goes up faster. Again, looks great, bullish chart, more bullish on the break of the red line. Retardio, I think it's going to recover really strongly. We're going to need to wait, and see broader market strength. For people to get serious about degenerate gambling on meme coins, I think the market has to recover and go into another strong phase. I think Retardio is really well positioned. I haven't sold any. You can see we've got this same low, higher close, lower close pattern. Above here, I start to get very bullish on it. But I want to see some buying. Pepe, very strong coin. This looks like it's going to be really strong for the foreseeable future. And who never heard of it? But let's have a look. That's not a good chart. Looks okay. Small cap coin though, be careful with it. SNX, I'll just do a couple more because these are all the same thing. I mean, SNX is strong. Like these are all the same. These are all the same basic trade, right? So I think what we're seeing is I haven't seen a bearish chart. They all look very similar. It looks and feels like everything's going to bang here. Like you don't have to be too careful. Like you just want to be fully positioned. So right now, the momentum effects are what are dominating our four pillars of shitcoinery. Out of momentum, knife catching, pump and dump, and narrative plays. The pump and dumps, the only pump and dump we've got going on at the moment is the Book of Meme, and that is a very sketchy situation. I would watch that one from the sidelines. Knife catching, we've had our knife drop. I missed that one. Our narrative plays, I think we have to wait until broader market strength before we see people piling into the AI narrative or back into the meme narrative. So right now it's momentum effects. So breakout effects are easy wins here. Any coin with a reasonable size making new highs or within spitting distance of new highs. And this doesn't work nearly as well on very small coins, but it works very well on coins in the top 100. So if we zoom out and look at what the bigger picture is, Bitcoin made all-time highs, normal pullback. Altcoins, this is our altcoin market cap, are in catch-up mode. And we see very clearly that we're in catch-up mode across the board. So what do I think is going to happen? I think alt season takes over from Bitcoin here. I think Bitcoin at 70,000 has upside, but limited upside. I think the bigger alts are going to kick it off while everything moves. I think the mistake here is going too early into too smaller coins. I think, you know, the medium size coins, the Ondos, the SEI, the Suis, the Runes, I think that size of things is probably best for right now. But I think we'll see everyone else, everything mooning. And then when we're close to the end, we're going to see what I call the garbage floating to the surface. And garbage floating to the surface is when the real crap starts to move. So when you start to get excited about, I shouldn't sell any Retardio ever, and I'm just going to hold for another 10x, that's usually the sign to get out. And then we're looking at a longer, more substantial pullback. So the plan has always been to get the bag, to secure the bag, to 10x your winnings with our automated systems, and then to hop into generation one. So every time you bank a winner on any of the, especially in alt season, because we're all going to make a lot of money in the next couple of months, dump the profits in FinRev so you actually keep it to secure the bag. The best indicator that we have is the equity curve, and specifically not whether or not it's going up or down, whether it's wiggling violently. If it's going sideways and not doing much at all, this is not a good sign for the performance of our system. If it's wiggling up and down very violently, this is a very good sign for the future performance of our system. Now, the bull market isn't going to last forever, and the game isn't how much you make, it's how much you keep. I'm going to show you in a few minutes how we take the profits from the 100x Coin Club, how we get about 10xing that on autopilot without ever risking the money you've already made. And when I say 10x returns on autopilot, you might think that's hype. But since 2019, what I'm going to show you today is turn $10,000 into 203 grand. Today, you're going to see a press button make money system that makes money every single year since we started in 2019. It's never had a losing year. It has $10 million of our own money. It makes 100% per year on average, much more right now, of course. And it earns risk-adjusted returns better than George Soros and Ray Dalio put together. That's an old slide. Our customers have made much more than that and lost a bit over the last week. So our customers have made over $2 million in the last 30 days, even after the downturn. Today, you're going to see a press button make money system that works in bull markets and bear markets, which printed money during the SBF FTX debacle, every other crypto disaster. So when crypto crashes, you're very well positioned. It requires no thinking, no luck, no predictions, no knowledge of crypto or blockchain. It runs on autopilot and you don't need to check it at all. And it works better if you don't check it. It takes 3 minutes to set up. If you can set up Netflix, you can do this. It doesn't require technical skill. It takes the risk out of crypto because it makes money like clockwork, even in bear markets. 4 out of the 10 world's biggest hedge funds use it. It's created countless billionaires and multimillionaires. Like this guy, John Henry, he owns Liverpool Football Club, the Boston Red Sox. He's made $4 billion from trend following. This guy, my spirit animal, Clifford Asness, he wrote the second ever academic paper on trend following. He's parlayed that into a $200 billion hedge fund, and he's worth $1.6 billion himself. I've been doing this since 2014 in my own money, and my personal results. Actually, I had an incredible February. I had the best February I've ever had in my TradFi trend fund trading, thanks to Coco. I have crazily, that Coco position that I have has grown to be $6 million or something notional. And I've made a bit over $2 million in the last 2 months doing this in TradFi. It's all based on the oldest and most consistent way of profiting from any market, which is trend following. And we all know that the trend is your friend. Now, what is trend following? Trend following is the simple idea that if a coin that starts going up has a higher probability of continuing to go up. And this is as close to a law of gravity as we get in financial markets. It was previously only available to the biggest hedge funds in the world. And there's an entire big industry. They've been printing money doing this hand over fist for 40 years. Not one trend following hedge fund has ever blown up. It's worked forever. And firms like Dunn Capital have outperformed the S&P 500 by nearly 500% over 50 years. Now, my retirement accounts are with these guys, and they've outperformed the S&P 500 by 600% over a 20-year period. And it's just been amazing for them. It's been, astonishingly a great thing for me to do with my life. This is an index of every trend following fund with a track history longer than 10 years. And you can see the gray line is the S&P 500. It's been the strongest bull market in S&P 500 history, and trend following has still beaten. Now, let's go back to the old school. The old school, the first human city was in ancient Sumeria, was modern day Iraq. Fun fact, before they had money, they used barley as money. And they stored the barley prices on these cuneiform clay tablets. They dug them up 5,000 years ago. You can run our trend following systems on those prices. They work exactly the same as they will today. And in the 16th century, the pattern that I've just shown you for dip buying is a trend following system from 16th century Japanese rice farmers. I didn't invent it. It's one of the first trend following systems. They knew all about trend following even back in the 16th century. Their systems work just as well today. Now, according to Cliff Asness, who worked out how well trend following would have done each decade for the last 100 years, more than 100 years, you can see that every single decade it's been profitable. Every single decade it's beaten the stock market. It's got a very low correlation to the stock market. It's got a very high Sharpe ratio. It's just an ideal system. It's as close to a law of gravity as we have in financial markets. Works in stocks, bonds, real estate, FX, works in commodities, works in every country in the world. It's worked for as long as money has existed. It's worked for 10,000 years. Why? Because it's based on human nature. It's based on us getting greedy and paying too much for stuff. Human psychology hasn't changed. We're still greedy. When crypto starts going up, we still get FOMO. This whole system is based on FOMO, and we're monetizing FOMO. We're still greedy. We still get scared when the market goes down. I still got really scared over the last week. That's not changing. But the amazing thing, the opportunity of our lifetimes, is that it works 6 times as well in crypto. So with Bitcoin, you can make a lot of money. You can Bitcoin goes up a lot, but it also breaks your heart. So here it lost 83%, but 62% was a single down day. And then it made an epic amount of money, and then you gave half of it back, and then it looked like it was going to be okay, and then it looked like it was going to be okay. It wasn't okay. It was far from okay. It looked like this was a great dip to buy, and it wasn't a great dip to buy. Broke your heart. And then right when it seemed like it couldn't get any worse and things were just going to go down forever, Sam stole everyone's money. And I guess my point is, and then, we're back up to here, but that's a wild ride. My point is that with Bitcoin, you have to time the exact top. You've got to know when to sell. Knowing when to sell is the hard bit. Like any dumb fuck like me can tell you when to buy. Telling you when to sell is a really, really good trick. So when you look at our system, you look at the little peaks and troughs here. It goes sideways for a while, but you've always got liquidity. You get to keep the money that you make all the time. So you can cash out with 10 clicks to the mouse any day of the week. And you don't, let's say you bought here, you've lost 80% of your money, you have to wait for it to come back. What if you want to buy a car or a house in the meantime? Like, you don't have to wait for your crypto to go back up doing this. So this is what we call the greatest discovery in little guy finance. So instead of talking about it, let me show you. So the basic idea is that the coins that start to outperform will continue to outperform. And if we look at the bull market from when it kicked off in mid-October last year, so it kicked off about here. So which are the coins that you would want to own? Well, you'd probably want to own SEI, Sol, TIA, AVAX, Render, and Rune, and we've owned all of these. But let's look at the very top one, is SEI. You can see that if I change this to make it more viewable, way before this became the top performing coin, you can see way back here, it's already starting to outperform all the other coins. And we saw the same thing with Solana. Like, Solana broke out early. We see it with everything that moons with TIA. You can see right here it was outperforming its peers very, very early on. And this is as close to a law of gravity as we have in financial markets. So let's look at the 2021 bull market. So the 2021 bull market happened in two phases. From January through to May, we had this first incredibly strong, powerful move. And you really wanted to own Matic and Doge. They were the standout buys, like way better than everything else by a factor of 10. Long before Matic started to moon, you can see it just started to beat all the other coins. It's the yellow line. And the same thing with Doge, way before Elon started tweeting about it. You can see it just started to beat everything else. And the second stage of the bull market was from like July. And the coins that you wanted to own there were AVAX, NEA, Mana, and Solana. And you can see exactly the same thing. They just started outperforming early. They just started outperforming early. They just started outperforming early. It's just very, very reliable mechanical behavior here. And we see it again and again and again. So from this, you now possess the ability to know with absolute certainty which coins are going to be the moonshots coming up. Now let me show you how to take all the thinking and the uncertainty and the guesswork and the skill out of this. Because, like, let's be honest, those spaghetti charts are a bit confusing, right? Let me show you how to turn it into a system that doubles your money every year on autopilot. And just so you don't think it's all hype, I'm going to give you that system for free. At the end of this presentation, there's no catches, there's no fine print, no enter your credit card bullshit, none of that. If you want me to automate everything for you so that you can just sit back and collect the bag like we do with no work and no risk, we're going to offer you the best deal that you possibly imagine on that. So we can automate this whole thing for you into a press button money printing machine where you'll learn how to ride this bull market for all it's worth. And then you're going to compound your gains into generational wealth without lifting a finger. So let's say you bought Bitcoin in 2019. You bought it right at the perfect time for $3,700 and you held it all the way through. Over those intervening couple of years, you would have made 57% per year doing that. Well, we made 107% over that exact same time. But you experienced it without making the obvious emotional torment, and the pain that Bitcoin hodlers have to go through. Can you imagine the Christmas dinners? Like, how those Bitcoins going for you? Like 2022 Christmas dinner was a shit dinner, I got to say. And at any point, you could cash your money out and you never got stuck holding a bag waiting for the market to come back. This is the point. In fact, if you bought at the absolute tippy top of the last bull market, you still doubled your money while everyone else was losing money. And you never had to try and time the exit perfectly. And that's the hard bit. There's one thing I want you to take away from today. It's timing the exit. The entries take care of themselves here. You want to be long. It doesn't matter what you're long. Everything's going up. Don't worry. Even XRP is going up. But you never experience a losing year doing this. You never get stuck holding a bag when the bear market's hit. If you stuck $10,000 back in 2019, you'd have $380,000 right now, compared to $110,000 in Bitcoin, $146,000 if you bought the average altcoin. And you'd be just a few years away from a $14 million retirement fortune. Now, at year 5, you're at 380. That's a lot. But you can count down to an 8-figure retirement. It's just around the next couple of bends. You can hold out for that if you get there that fast. And compounding does the real work. So if you've ever wished you had a time machine, Marty, we got to go back and buy the Bitcoins in 2011, 2012. This is the next best thing. I've traded this way in the old market since 2014. I've got my retirement accounts there. They've compounded to actually, that's a ludicrous $6.7 million AUD and counting. We've been running it because I had a good month. We've been running it on crypto for a couple of years now. The results have been nothing short of incredible. We offered it to our best clients in the middle of the bear market while everyone else was taking it right in the ass. This is our bear market results, 100% compound annual growth rate. And I'm really proud of this. And I want to point out that this wasn't in a time of up only. This was a time when crypto was very shady, and it was like everyone hated crypto and no one was interested. The FTX scam, the Luna, the Voyager, all that stuff was happening. All the bad stuff, we took it and it just really outperformed. And then in the bull market, everything's obviously super easy, and this is steady and smooth and reliable as clockwork. I want to show you, this is the 2023 full-year performance of the biggest hedge funds on earth. And you can see that at the top, we've got 59% compared to our 100%. But you only go 3 or 4 places down, we're back to 20%. And, some of these guys, these giant big guys, between 2 and 5, like, hang your head in shame, boys. Like, we have absolutely beat every one of the biggest hedge funds in the world. We beat them like red-headed stepchildren. And we've done it every year. We've never had a losing year. The opportunity is so much greater in crypto. We promised to double people's money in a year. We did. Every single person who's used this system has made money, who's been in it for longer than a month. Everybody wins, no exceptions. I've never heard of anything like this in my life before. And now, let me show you how it works. All right, let's have a look. Let me get a little bit nerdy with you here. So what we're doing here, this is our forecast. When our forecast is positive, we bet that the crypto goes up. When our forecast is negative, we bet the crypto goes down. We are holding a position with we are holding a portfolio with many coins, like all 100 and something of these coins. Why? Because the more coins we hold, the less luck has anything to do with it. The more luck evens out with the law of big numbers. And we're shooting for outlier wins, so we want to take many bets. So you can see that our forecast went positive. A forecast of 10 is a normal long position. A forecast of 20 is our maximum position. We got long right here. We stayed long. We banked some profit. We added to our positions, and we've been banking profit steadily, and we banked some profit here. And now you would call this cautiously optimistic. Now, this is not as impressive as you might think because, well, anyone can make money when it's like this. Like that, this is no great trick. I want to show you how it works when things don't go right, when things are very bad. I don't think there's any worse time than when Sam stole everyone's money. And this is Sam's coin, Solana. And this is when all that bad stuff with FTX went down. So you can see the day before it all started, we were very cautiously long. We had a long position of 4.5, which is about a half a long position. The very next day, we started to get these rumors, the trouble in paradise things, and immediately we switched back to flat position. The very next, now I want you to imagine if you're a long investor, you've decided that you want to invest in Sam's coin, you think he's a upstanding citizen and his coin looks like the best prospect. The very next day you hear these rumors, what are you going to do? You're probably going to dismiss the rumors and say, oh, that's just fun. Don't believe that. And then you give it one more day. And then one more day it goes down and it looks like these rumors are getting a bit bad. And then you think, oh, but the price hasn't gone down that much. It's only gone from like 33 down to 28. That's not that bad. I'll give it one more day. Everyone gives it one more day and then you're stuck. And then you can't leave. And then when you're stuck and you can't leave, that's when all the really bad shit happens. And you can see what happened here is we didn't just get out of our position. We got short, started betting that it was going down, which is very impressive. Like we've ridden that short right to the beach. We only started banking the profits here, but I want you to imagine how good you'd have to be. You've just made the profits of the year's profits out of shorting Sam's coin. And then are you really going to say, I've made enough money, I'm going to flip and go long here? Because we flipped and went long here, it was like $14. And so 120 today. Like, my point is that nobody's that good. Like, nobody's that emotionally centered. Nobody's like Warren Buffett as a Zen monk. Everyone gets emotional. Everyone starts to hate this coin when it's going down and love it when it's going up. And we all do that. So this is a way that you can take your emotions out of it and profit from the emotions of other people. Let me show you. Show you how it works. Sec. I'm going to have a little quick look. Okay. So this is the first thing you see when you log on. So this is the amount of money you put in. This is the amount of profit you've got. This is your current value. So you can see that this particular account started off at 58, reached a low at one point of 44, reached a high of 145, it dropped down from 145 to 120. This is a totally normal drawdown. This is absolutely the price of admission to this. There's no way around drawdowns in trading. If you think there is this, then someone's lying to you if they are. The next thing that you're going to want to see is scroll down a bit and you have our top 10 long and short positions. So you can see that today we have a significant number of long positions, but also we have some short positions. We didn't have this last week. So we have shorts on OP, we have a short on GMT, we have a short on TRB, which is a really good performing thing. We have a couple of shorts here, and we have these balanced out with longs. This is the way it works. You can click on your portfolio and you can sort it by alphabetical order, by longs, and see all the shorts. So today we have about 20 shorts and we have mostly longs. But my favorite way to sort it is by notional value. So this is our largest position today and we are long, and let's have a look at it. You can click on any position, bring up a chart. You can see our forecast. You can see we got long here and we continue to be long. It's pretty simple. Now, to set it up is really simple. So you need to have Google Authenticator or a hardware authenticator plugged into your computer. We don't want anyone logging in with just a username and password, so no one can get into your account without you. The way that you do is you go to your exchange. We use Binance, BitGet, Bybit, DYDX, and KuCoin. Currently preferred for US customers is DYDX. But all the exchange, there's no clear like which exchange is best. It's not, they wiggle back and forth between, and they're all slightly different. So you choose your exchange, you get an API credential from your crypto exchange, you put it in here, you press save. The very next day, you deposit money to that account. FinRev will see that you've deposited money to it and start trading with it. If you pull money out, you don't have to email support or ask our permission. You just withdraw the money from your account. FinRev goes, okay, he used to have 20 grand in, he pulled 10 grand out. Now we're going to trade the perfect portfolio for $10,000. And so you have total control over your money. You can pull it out with a couple of clicks. There's never any sort of, an API key lets us trade on your behalf. It doesn't let us withdraw or transfer money out of your account. And so there's no possibility that a rogue employee could go nuts and steal everyone's money or anything like that. It's just not that kind of thing. And this is it. It's very, very good. It's incredibly good. And this is about creating generational wealth for crypto. And what I mean is that the compounding, after 5 years at 100% per year, compounding $10,000 is $320,000. But my point is that you're within sight of a $10 million fortune. And this is my situation now. I've been doing TradFi trend for a long time, and I'm within sight of that $10 million outcome. Now, our strategy is done on average 107% per year. I've done only 15% per year in TradFi trend. Still compounds up, but 107% is a lot better. Now, what you really want to do here is just relax and enjoy the ride, and know that if you can manage to keep your hands off the steering wheel, and this is something that I talk with clients about every day. We all get scared when our accounts go down. We all get greedy when our accounts go up. You want to just keep your hands off the steering wheel. If you can keep your hands off the steering wheel, not try and mess with it, not try and time things, it's going to make you rich in 5 or 10 years, no matter how small you're starting with. And just don't worry about day-to-day fluctuations, because you can be highly confident at the end of the year you're going to show a profit. Now, this is kind of interesting though. So it makes money in bear markets and bull markets in a very different way. This is because markets crash in bear markets and they don't crash. It's very difficult for something to crash upwards. So in a bear market, you tend to see really, really long periods of sideways with explosive growth when the market crashes. So this was us in the bear. And you can see in the bull market, it's much steadier. And the sideways periods are much less. We have big, long 60 to 140 day sideways periods. In the bull market, they're 19 to 31 day sideways periods. And our current one is like 11 days. That's about right, in my view, about right for where we are. Now, my goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want. And money is just a tool to buy time and freedom. Our compounding does the real work. We have built what I believe, this is the ultimate platform for ongoing trading system development. There's no doubt this is the finest trading infrastructure ever offered to retail traders. It's far better than what exists in most hedge funds. And I know because we've got a lot of hedge fund guys using it. And you didn't know me a couple of days ago. You've given me your time and attention. If I've done my job today, you've given me your trust. I don't take any of that lightly. So let me say thank you for showing up today, because you believe in crypto, because you believe in the opportunity it presents, because you've given me your time and attention today. I'm going to make you an incredible offer right now to put this thing to work for you. So for those of you who know me, words alone aren't enough to thank you for supporting my ongoing quest to be the best in the world at this. And it is the honor of my life to absolutely grind like an animal every day for this community. I'm leading us all to generational wealth, and I want you with me. For those of you meeting for the first time, the only way I can earn your money is earn your trust is to put some money in your pocket right away. So therefore, we're giving you 6 months access to the light version of the system you've just seen. So this is the same system, but it's simplified. It's far simpler and easy enough for even a beginner to use. You have to enter the trades yourself. It's not automated, but it gets around 75% of the performance in a bull market, and in a bear market, it stops you getting wrecked. So you can't lose all your money in the bear market. It's a very, very good way to trade. Like if you're not trading with our automated systems, this is definitely the second best thing in the world. So let me show you how to use it. It's the exact same website security login as you've already seen, but with a simplified dashboard. It just tells you what you have to do today. Today, you have to open a long trade in this and this, and you have to close this one. It tells you what trades you should have currently open, and it tells you what trades have recently closed. And so you just log in once a day and check what you have to do, and 2 or 3 times a week, you'll have something to do, and it takes a couple of minutes. So this is, you're all going to get an email with your login details. I just got one more thing to show you, and I've saved the best for last. So what if you could earn twice as much as the system I've just shown you? What would that do for your life? How much faster could that get to your freedom? So if 100% per year is in blue, after 1 year, you're 20 to 30,000. That's a big difference. But by year 2, you're looking at the difference between 40,000 and 90,000. And then by year 3, it's getting ludicrous. It's 80,000 to 270,000. It's a big deal. So here is how the really big algo trading firms build such good algos. They're not trying to build a super system. They're trying to blend multiple systems together. And what we see is, just in the same way that holding 5 coins is better on average than holding any single coin, having multiple trading systems is better than holding any one system. So when one system doesn't work, another will. The second strongest edge. This is our newest system, which is cross-sectional carry. I don't have the time to explain it, but let me just post the full technical specs in the chat. So those of you who are a bit nerdy, you have the full tech spec of what we're doing here. So carry is one of the strongest edges in finance. It's a Sharpe ratio of 1.17 and a CAGR of 53%. It's good, but not as good as trend. It's still great. But look at the magic that happens when we combine in a 65-35 mix. We've got carry, which does 53% a year at Sharpe 1.17, with trend, which is doing 100% a year at Sharpe 1.71. When you blend them together, then you get something that's amazing. Now, we go from 100 to 243% per year. Now, we build and a Sharpe ratio goes up to 2.15. Now, this is actually a little bit wild. I would prefer people not. We build everyone a custom system, and we're going to explain how that works. I personally think that running this with an expected drawdown of 34% is a little much for most people. I think most of you would be more comfortable with targeting 180 to 200% a year, but with drawdowns keeping them to around 20%. I think that's the sweet spot for most users that I've observed. So I recommend dialing it back a little. Now, this is the difference between retiring at 40 and retiring at 50. You know, when you're still young, when you still have the energy, when you still have the desire to explore the world, when you still have my point is, you don't want to work until you're 70 and then you can't enjoy your money. You know, this is the difference between having it when you're still young enough to get out and enjoy it, when you can let your relationships flourish and you can have a great life. So to preempt any bitching, anyone who bought before the 1st of Feb is grandfathered in with all the future upgrades. Here's the deal. We have 3 tiers of FinRev available for you today. FinRev Silver is free 6 months. Everyone who's here today, you're going to get that in your email. FinRev Gold, which is trend following, which is 6,500 for 3 years of fully automated trend following trading. Why do we sell it in 3-year blocks? Because it's a multiple year thing. You don't want to be doing this for just 1 year. You want to keep it and double it and double it again and double it again. FinRev Platinum is 9,500 for 3 years of fully automated trading with all of our systems, including future upgrades, but it gives you the ability to run multiple exchanges as well. So you can reduce the risk of, say, your exchange pulling an FTX by spreading it between multiple exchanges. You can also have multiple accounts and have one that's running at a very high leverage, that's taking extra risk, and you can have one that's a safe and conservative account. That's a very, very good way of doing things. So let's look at FinRev Gold. You get 3 years of automated algorithmic trading with FinRev. You get a VIP onboarding with one of our expert crypto trader coaches. These are guys who use the system themselves with their own money. Everyone in the company uses it. It's not a customer service sweatshop in the Philippines or anything like that. You get the same stats and monitoring that I've showed you today. And you can, let's say you see an opportunity in some small altcoin, like Retardio, for example. You want to pause, throw your money in an altcoin, try and double it, triple it, whatever, and then stick it back in FinRev. We absolutely support and endorse that. You can pause or start at any time for any reason at all. If you're just moving money around, if you're waiting for a coin to pay off, you can just get the deal and you start while you're using it. Now, we have a W money guarantee, which is that if you aren't in profit after your first 12 months using the system, your 3 years doesn't start until you've doubled your money. So let's say you only do 90% for the next year. You join today, you only do 90%. Your 3 years does not start until you've doubled your money. Now, FinRev Platinum, slightly more expensive, but there's a lot more with it. So you get the same 3 years of algorithmic trading with FinRev. And we should say that for both FinRev Gold and Platinum, what happens at the end of the 3 years? Do I sting you for another 9,500? No, of course not. If you want to keep continuing this, and I hope you want to continue trading with us for the rest of your lifetime, frankly, we're going to charge you 20% of the profits we make together. So we're not going to charge you there's no extra re-up or anything like that. If you want to continue, just pay 20% of the money we make together. You get the same VIP onboarding, the same stats and monitoring. It's a completely custom system in the blend that you want, designed for your goals. You get grandfathered in for new systems, and we've got 6 more on the drawing board. They're really, it's a phenomenal development system that we spend millions of dollars a year building for no extra charge. You get both trend following and cross-sectional carry, and this makes things smoother and it makes them faster, and you get the same W money guarantee. So how you get access is you go to finrev.trade/call. And this is not some sort of like a high pressure teleshark call. This is just a quick chat with our onboarding team to make sure that you can get a result with our system. We won't sell it to you if we don't think it's a good move for you. If there's a better move for you, if you're starting with $1,000, you've really got to take more risk. You know, my point is that it's just find out if you're a good fit for the system. And if you are, we get you onboarded really quick. John, yes, the 2% on rollover has been removed, and it's removed for everyone. Any questions, Ian?
Hey man, yeah, there's one there from Lee. I think you'll like this one. So he says, you previously mentioned that trend plus carries similar to trend, but smoother. You also say here that trend plus carry works twice as well. Could you
Not
give
quite
us
twice as well. Not quite twice as well. In risk adjusted terms, it's about 50% as well. But the weakness of trend following is that it only works when we get a trend, right? If you're betting that we're betting that coins. What I've played down, the marketing aspect of it, is that we're either betting that coins go up or betting that coins go down. We make money if coins go up, and we bet they go up. We make money if coins go down. But what I didn't tell you, the quiet part out loud, is what fucking happens if they go sideways. We don't make money. Now, cross-sectional carry makes money when it goes sideways. It also makes money when markets go up and markets go down, but it makes it in a very different fashion. So by blending them together, we get at least a cool drink of water when the market is going sideways. And this is basically it. When you strip all the bullshit out of it, that's basically what it is. Not everything works all the time. If we're betting on trends and we don't get trends, we need a second option. Yeah, that's it. Inaki, yes, we tell you exactly which coins to buy and which coins to sell and when.
And just to absolutely clarify that, it will be the FinRev Lite system dashboard that will tell you these coins, not like in the 100x club. FinRev Lite, 100x, they are different systems and they should be treated as such. Because I know some people will go, well, this is saying open in FinRev Lite, but not open in FinRev, and 100x is saying something else. So I think just a bit of separation between everything is a good idea.
Okay, so John has a very interesting question. You mentioned going for 180 to 200% and 20% drawdown. What vol target would that be? So I'm going to get a little bit nerdy here. trend, this is our optimal bet size. So for trend following, if our Sharpe ratio remains the same, this is going to be about 70% is the peak optimal curve for trend following. This is a neutral skew system. Don't worry if you know what that means. This is a negative skew system like cross-sectional carry. So our optimal Kelly criterion number for here is only about 45. I would like to see that with a fair margin for error. So personally, what I would recommend is either a 50-50 or a 60 or a 65-35 or a 60-40 blend of trend and carry, but with trend traded at a higher vol target, probably 45, and cross-sectional carry traded at a lower vol target, probably 30. That is a really good question, and don't worry if you don't understand what that means, because it's all pretty nerdy, but we're still testing it with our own money right now. Right now, it looks to be very well behaved, but with negative skew systems like carry, you need to leave a much bigger margin for error. I would be shocked if we fucked up trend following. Like I almost don't even know where you would fuck up trend following. I don't even know how you'd fuck it up, but it's entirely possible to fuck up cross-sectional carry. So we're going to be intentionally a little bit more cautious with it. I wouldn't want to see people getting 30% drawdowns in using cross-sectional carry. Any more questions?
It's a good one. So why would one be motivated to pay an upgrade to FinRev if we're getting signals from 100x? What are the pros and cons?
This is a very good question. All right. So 100x Coin Club is about doing essentially degenerate gambling bets with huge, enormous upside. When 100x Coin Club comes off, FinRev isn't going to touch it. Nothing can touch it. Betting on altcoins in a strong bull market like we've got now, the problem with doing that is that it's a very good trick to time the top. And historically, what most people have done, myself included, I've done it before, is get very, very, very excited at the bull market peak and decide, oh, I'm not going to sell out. I think Scott's wrong. I think you're just selling too early, and we're still so very early. And typically, bear markets in altcoins are over 90%, sometimes above 95% in the bear market. So in my view, it's irresponsible to go make, a couple $100,000 or $1 million in an alt season in a bull market, which is entirely on the table for every one of you, no matter what you're starting with, have the capability of pulling at least 6 figures out of this bull run. It's not responsible to try and turn that into 8 figures. So this is, I guess you'd call this the growing up adult version. It's still pretty wild, but it's the savings and wise investment version. Whereas I'll be straight up with you, the 100x Coin Club is like very, very aggressive risk taking. I would, if someone said to me, I want to join the 100x Coin Club and trade my 401k account or my retirement accounts with it, I'd be like, whoa, guys, you can't do that. It's not that kind of thing. It's appropriate for having, some money in, but it's not appropriate for carrying the weight of your wealth building program. So if your plan is to have some fun and make some money in the bull market, 100x Coin Club might be a better fit for you. If your plan is to use that and compound it into generational wealth, 100x Coin Club isn't going to get you there. And it's only for the bull market. And, we look really, really clever in 100x Coin Club right now, but honestly, it's not me. It's just that the market is going up and it's really, really easy to read. And it makes me look like I'm a lot better than I am. It makes everyone look like we're a lot better than we are, to be honest. Does that make sense?
I think that makes sense, yeah. I think it was a really great presentation with everybody totally focused, because I'm scrolling back through the questions and yeah, it's a lot of familiar faces on the call today. So there's a couple of comments rather than questions, people that are sort of 60, if you know what I mean, might be thinking, oh, fuck my life, you guys talking about 10 years. But I think there's plenty of room to run.
There's plenty of room to run. It's going to be an amazing year, guys. Like this is so. If there's one thing I want you to take away from this is, however you're going to do it, whatever your plan is, your biggest risk right now is being under allocated to crypto. You guys, you did the hard work. You've noticed it before retailers turned up. Like we are still very, very early. My normie mates haven't started. My grandparents haven't started calling me about crypto. I'm not getting calls from randos about, is it time to invest in crypto again? And I'll start getting that before too long. You've done the hard work, you've positioned yourself here. It's just how aggressive do you want to be? And from my point of view, your number one risk here is being under allocated to, you found one of the greatest wealth building opportunities that you're ever going to have. They don't happen every year. You can't do this in crypto. You can only do it 1 year in 4. We've got the right time, the sun's shining, let's make hay. But very clearly, I'd like to say, have a plan for what to do when it's all over. This shit is not going to last forever. When it does blow up, and they always blow up, don't believe any of that, with super cycle stuff. We're probably going to multiply our money enormously. And then those who stick around too long are probably going to lose most of it. That's just the truth. So I can't be any more honest or transparent than that. What happens in the other 3 years out of 4? A mixture of horror and terror and boredom. So it's roughly an 80-20 mix of like mostly boredom, 80% boredom and 20% horror. This is the price you pay for admission. Yeah, and carries us through the bear market, obviously. But trend works pretty good in the bear markets too. Like trend works totally fine in bear markets. It just doesn't work good in sideways markets. Anything else, guys?
I think there's one last one here. You might have a way to capture this with a bias, as you know them so well. Freedom's asking, how can people still not notice that Bitcoin went from 0 to 70K in only 15 years?
Dude, you're in it's much easier to it's very difficult to get someone to change their mind. So if your point of view was, oh, Bitcoin, buttcoin, oh, magic beans, fake money, oh, nerds. And the thing that every time you see crypto go down in a bear market, you're like, ha, nerds. How's your magic internet money doing, suckers? It's very difficult to change that opinion. And so if you think about what causes trends, it's an underreaction and then an overreaction. So we're still in the underreaction that people haven't quite caught on yet. When we see an overreaction where the guys who hated Bitcoin at 16,000 will start to love it at about 150,000. You can take that to the bank. You can absolutely take that to the bank, that the same guy who hated it at 15,000 will absolutely love it at 150,000. And that's kind of our time to sell. We're kind of doing you don't want to be discretionary trading altcoins when things get like completely, when you walk into a coffee shop and all people are talking about is altcoins and which coins. You're welcome. Yes. All right, guys. I think that's about everything.
So thank you, everyone. See you in the group. Thank you, Scott.
Bye.